I'm Ricky Fort from Geelong Real Estate Co. Welcome to the property panel. We've got 4 amazing guest speakers brought to you by Loan Market Geelong. If you're looking to buy, sell or lease a property, you won't want to miss it. So obviously this show is co-sponsored by Sarah Thompson and the team at Loan Market Geelong. So Sarah, welcome.
Thank you for having me, Ricky.
So obviously just give the guys at home just a bit of a quick spiel about Loan Market Geelong. How long have you guys been around?
Sure.
Tell us about you.
We've been around for over 20 years. I've been a finance broker for that period of time and have built a team of 21 at the moment.
Tell people before we go any further the demographic of staff.
As a female business owner, we seem to attract lots of females. So we've just hired our first male.
And lucky number?
21. So it's great to have him on board. So it's been an interesting...
How intimidating, guys. Can you imagine that just quietly? But, yeah.
We just don't have many men that apply for, admin roles. So you're welcome, most welcome. So our role as brokers is really to guide our clients through probably one of the scariest times in their life, which is either buying, selling, refinancing, not so scary, but really just to hold people's hands and help them, sort of conduit between real estate, building inspection, conveyancing, to make sure that they're getting the right advice from the right people.
The glue that brings all this bad boy together.
Sure, yeah, I think people will come to us for that. So, and really it's just about educating clients along the way. So not just doing everything for them, but if they're wanting to understand how it works, going through that process with them as well.
Yeah.
So
how long have you personally been doing?
20 years.
Yeah. Time flies when you're having fun.
Yeah,
a lot of experience in this room. So, a couple of questions. We'll get straight into it, if that's okay. So, this one's from Janine. So, for self-employed people, who are the better banks? Business profit and loss apparently is looking good, but individual group certificate isn't. So that's a bit of a complex one. I haven't given you long to prepare for that.
No, that's fine. There's been so much change post-COVID for self-employed, and it's actually a much better space for them now. It was incredibly tough through COVID, and the banks were strict, obviously, with businesses that weren't performing as they were before. There's been a lot of change. So some banks, there's not a particular bank. It's every single person's situation is different. So you might have a lender that will take 6 months of credits, of salary credits directly to their account, and they'll actually...
What's a salary credit?
Just salary going into the business owner, just putting actually that salary, it has to be routinely into the bank account, and that's their wages. There's other banks that will take a 1 year's tax return, some that will take no tax returns and just an ABN with some BAS and some trading statements for their business.
So in terms of, as I said, if the profit and loss is apparently looking great, but the group certificate isn't, banks will take that into consideration, that the business is looking healthy, that there's potentially wages to draw down. Sounds like it's potentially just like maybe a cash flow issue. They want to keep the business looking flush.
There are so many scenarios, and especially for self-employed. It's probably the most complex for lending because you do have so many. We've got over 62 lenders that we can access. So if somebody comes to us,
is that the most? Is there 62 people out there? That's a lot.
62 lenders. There's more that sometimes maybe the customer service might not be so great at, so it might not be a lender that we use, but we've got over 62 lenders, so there's thousands upon thousands of different types of loans that clients can get, and especially self-employed.
If people are looking for finance, obviously, we're not get your own independent legal advice and financial advice. The show's not about that, but obviously if people want to find you or any of your other 21 staff, where do they do that?
We're
social?
Social as well. We're in Ryrie Street on the corner of Fenwick and Ryrie. You can't miss us opposite the huge building that's just been built next to us. Obviously call and we can make a time. There's 7 brokers that work with us.
Do you do after-hours appointments and stuff as well?
Absolutely. Majority of people, though, post-COVID are really... a lot of them are daytime now.
Fluid.
Yeah, people will catch up via a phone convo, get their partner at work, and they'll do it in their lunch break. So really flexible.
Yeah, cool. Break costs. So this one's from Kristen B. So thinking of fixing for the next 2 to 3 years. Obviously things up in the air. If things change and rates drop, where does this leave us? She's gone on to say PPR 1.2 owing around 700,000. So you probably need a calculator for that. I'm happy to cut if you have to.
No, that's fine. So break costs are an incredibly hard thing to actually determine. So if you fix, let's say at 5%, and then interest rates go to 5.5%, you probably won't want to break that because you're going to be on a higher rate. So therefore, really the bank should be paying clients money back, which they don't. Because they can on-sell that money then at a higher rate anyway. If you're at 5% and rates drop to, let's say, 3%, and that's a 2% difference, yes, there'll be quite large break costs, or it could be quite small. It depends on what the difference in the rate is between current rate and the rate that was fixed. It depends on the size of the loan, and also what length is to go on that term. So if it was a 2-year fixed rate and you're 22 months in, it's going to be pretty small to get out. But again, depending on where rates are at.
Yeah.
An easy way though for clients to find out is to actually, you can call your bank and they'll actually give you a break cost at that stage. When you're taking out a fixed rate though, no one can tell you what that break cost is. There's a calculation in your loan documents that no one can understand.
Yep.
So it's incredibly complex. So really, if you're going to be taking it out, you've got to be thinking, if I'm doing it for 3 years, am I selling? Do I think rates are going to be going up? If you think they're going down, might not be the best option. Or if you're going to sell, or marriage breakdown's probably the other one. Not that you can, know whether
Predict
that's going to happen or not.
Geez, that's grim if we need it. No, certainly.
But you can do half and half, or a portion and a portion, so hedge your bets.
It's not a question, but obviously, in terms of ratio, like what are you seeing out there in terms of fixed versus variable? Like, out of 10 or 100 deals a week that you probably, or day you're doing, like what's the ratio? 50%, 60, 40?
At the moment, not a lot of fixed.
Yep, really?
Yeah. So fixed rates, we've just noticed are coming down a little bit, and generally you sort of see, if it's a 3-year fixed rate lower than a variable, the banks aren't going to lose on that.
Sure.
So it is a bit of a hit and miss game sometimes. And obviously they were saying rates were going to stay where they were, and they've gone, what are we now, up over 2% in the last year.
Yeah. Crystal ball stuff.
I would say, last year lots of fixed rates. Everyone's coming off those at the moment and going on to variables, and just trying to, it's a bit scary though, going from sort of low 2s or 2% up to
6?
5.5.
Yeah.
Yeah, around there.
Is there still rates in the 5s?
Yeah, low 5s as well.
Yeah, great. Last question. No, sorry, 2 more for you. Sorry to keep you. So bought in 2020. Not sure if we want to waste time on applying for finance. What does it cost for a valuation on a home? Looking at equity in our home just to know our position.
This is a great one. So when clients come to us, if they're wanting to get equity out of their home, before we even touch an application, it's all around the valuation. So the higher that valuation is, then generally the more equity clients can pull out for an investment property. We've had one recently where it was a property we had 2 valuations of 860, 880, and we thought we'll just get another 1 or 2, and the next one came in at $1 million. So that actually meant that the client wasn't going to be paying mortgage insurance, saved them about $28,000 purely by getting one more valuation.
You would look like a superstar.
Well, there's no cost for us, for the business, to do that.
Yep.
So as brokers, we actually get free valuations. A lot of times if you go to a bank, sometimes they'll make you put in an application, which could be, you don't know if that bank's going to approve it or not.
Sure.
And then they'll order a valuation. So we do it the other way around. We order everything up front. When we lodge an application, we are 99.9% that is going to fly through, because we've done all the homework and we've got so many banks as well. So no cost. Yeah. Commercial property different.
Yep.
Or some regional or rural, farming and things like that, specialised property, but generally no cost.
So essentially, if people are thinking about it, first step's probably to give you a call.
Yeah, absolutely.
Yeah, cool. Another tricky one for you. $350,000 in cash to put towards a deposit. So pre-approval they were up around the 920. They were looking at a rate of around 4.79 fixed, but would have been 2 years or so. This is going back a couple of months ago now. They're thinking, they're just not sure what's happening with the market. They're thinking, we're hedging our bets at 6.2, but you've probably already answered that question in terms of what are you seeing in terms of fixed versus variable. So maybe where we could take that question is they used to offer a rate lock and things like that. Is that still available?
Yeah, not generally unless you've actually purchased. So if you actually purchase and rate lock at that stage, then all the banks have a different system with that. Then that can actually lock that rate in. The other thing with that is probably also the pre-approvals because with pre-approvals, a lot of people might say, I've got a pre-approval, but a lot of banks don't even do them, and it might be an automated one. Pre-approvals are usually hold for...
How many times have you seen somebody jump on Google, type in how much can I borrow, and they're just 20 or 30% off?
It is so different.
It's heartbreaking.
Absolutely. And people's HECS can be taken into account, credit cards, car loans, children, child support. There's so many things
Kids.
that ruin
everything.
Yeah, that definitely decreases your borrowing capacity. So there are so many things that can actually... that can change the borrowing that you... So for this client in particular... They might have gone to a lender that has really low borrowing capacity.
Yep.
And we could turn around and say, well, this one over here has another 150,000. Same rates.
Yep.
But just different process or different policy that they have. Every bank has a calculator.
I guess that's the benefit of going with again, we're not spooking anyone, but obviously it's the benefit of potentially going with a broker over at the bank direct.
Yeah, absolutely. Yeah. And Again, pre-approvals, if you do a pre-approval generally, it doesn't really mean much.
Yeah.
So we'll put people in a position where we've done credit checks, we'll check income, serviceability, affordability, so that when we send them to auction, we know, or to buy, we know that they are 100% right to go.
Amazing.
No surprises.
Thank you so much for coming in.
Thanks
Superstar.
for having me.
No worries. Now, my favourite part of the show, or maybe second part of the favourite show, Jim's building inspection, Graeme Boyd, absolute superstar in the building industry.
Yeah.
I could speak for ages about Graeme, so obviously ex-real estate agent, ex-builder.
Yep.
How long have you been a building inspector?
I'm in my 13th year.
Time flies.
This is like yesterday. Yeah, so 13 years ago I got out of real estate and...
You saw the light.
Seen the light.
This is not for me.
Went from the dark side to the good side and real estate got me into doing building inspections though, because prior to that, as a builder, never really thought about building inspections, and then did real estate and would have building inspectors come while I was on the other side, hoping they didn't find any defects. And I thought I could do that better than them. And away I went. And so, 13 years later, here I am.
You are. Best in the business, great reputation. We've got a couple of questions for you, mate. We haven't, again, similar to Murray, we haven't given you any heads up. We like to throw people baptism of fire, so we'll get straight into it. Where we go. So Amelia and Jesse asked, if I'm looking to sell my place, I know there's work to be done. Oh, this is a good one, actually. People don't ask this. What are things that I should do and focus spending money on? Like, what are the big ticket items that you're looking for? I assume, they don't want to take on major structural stuff, but what are the... How can they help themselves?
So when a buyer gets a building inspection, where they're looking for major structural, and then while we're doing that, we find minor defects. So minor defects are things that owners could fix prior to going on the market. Are the taps leaking? Do I need to paint some bits and pieces? Have I got some gaps somewhere? What are the condition of my showers like? So the better presented, the less minor defects we're going to find.
Yep.
More and more people now are ringing me saying, we're about to list our house. Could you come and do a report so that we know what we're going to find if we sell it subject to building inspection? So I'll go and pretend I'm doing it for a client and go there and pull it apart and say to them, these are the defects that the next building inspector's going to find.
Go and work on this stuff.
So work on these things. Obviously, there's major structural.
What's the
not enough. How much do I get? Not enough.
Relevant to the time of when we're shooting, but what's the cost or something
it's
like
that? About $500.
Varies. Yep,
yeah, about $500 to get a building inspection done.
$495 for Geelong Real Estate Co customers.
There you go. That's right. Yeah.
Yeah.
Maybe $515.
Yeah.
I'm not sure. So that's a worthwhile thing if people think they've got some major issues, because at least we'll identify it, and then they maybe, and this is me maybe putting a real estate hat on, from the point of view that if you know what's wrong with your house, then you're more likely to accept that once a buyer finds that out, then that may be the price point that I'm at.
Yeah.
Do you know what I mean? So nothing worse than you've sold your house, you think you've got $730 for it. I come along, pull it apart, and say, oh, you've got to re-stump it, you've got to do this, and that's going to cost you 30 or 50K or whatever it might be. And now you think, oh, I'm only going to get 680. It was probably only worth 680.
Yeah.
So it's one of those things, if you think you've got some issues, I probably do 2 of those a week for people that are going to list their house for sale.
That regularly?
Yeah, they just want to know what they might find. Okay, so we go in, we do it. I just pretend I'm doing it for a buyer, so that they're getting that full building inspection.
Yeah. That probably segues really good into another question actually that they had, slightly different, but it said, do you need to disclose to a buyer if you've been to the property in the past? So that goes in perfectly with that. Obviously, if you were representing the seller, that's probably a little bit easier. But if you're representing a buyer, I think where they're saying here is, I feel like I've wasted money on a building inspections in the past. I went with a building inspector who, after I'd paid for the building inspection, they found things wrong with it. Then they'd notified that they'd been there in the past. I think they felt potentially hard done by. So that was from Shona. So I'm not sure.
So I think, ethical side of things. So I had a client ring me today and said, I want a building inspection at a property in Hamilton Heights. And the first thing I said is, I went there 3 weeks ago. So I disclosed I went there 3 weeks ago and said that if she wanted to, she could buy a copy of the report.
Yep.
So I then ring my first client, I'm a little bit unusual, a little bit weird, and said, hey, you happy? Because I know they're not buying it. You happy if I sell a report and give you some money back? Which everyone says yes.
It's a win-win.
It's a win-win for everybody, okay, yeah. So if I went and did an inspection report for a vendor, and then somebody rang me, I would disclose I've been there before.
Yep.
You can't get in trouble for telling the truth.
Well, and how does that? Yeah, no, that's definitely good advice. So, how does that look? Obviously, if someone's, if things have improved since you've been there last, you need to disclose there were issues and they fix it.
I would just tell them the truth. So I would say, well, I went there in February, and there were some issues. I haven't been back. I could go back if you'd like. I'll charge them a smaller fee and I'll go do a comparison of what was there in February to what they've done now. Normally, if I do a vendor report, though, I say to them, if there are things they're going to fix, for them to ring me and I'll come back and tick them off the list. Okay? Because some people want to use my report to give to buyers.
To sell it themselves, yeah.
Yeah, well, they give it. So if I've charged them, then they'll give them to a buyer. They'll say to the agent, hey, some buyers don't like vendor reports because they think they're tainted because they think that I've done it for the vendor.
Conflict of interest.
And I'm not going to tell them all the problems that there are. So there should be a market for vendor reports because probably in Canberra, the vendor pays for the building inspection, the pest inspection, and they have to do an energy rating. So people come here and the buyers have to do it all. But buyers still think if it's done for the vendor, it's tainted.
Yeah.
So, you can't win.
I guess just potentially do your research on the building inspector you're looking at. Obviously, different building inspectors in Geelong have got different reviews online, so they probably speak for themselves. If you do your research, you'll find that for yourself.
Have I got any? I hope not. I don't do the Google thing.
Murray, feel free to jump in as well if you've got an answer for this one. But in terms of percentages of properties a month/year that fail because of a major building inspection, major structural defect, the question goes on to say from Irene, I've offered on 3 separate properties in 2 months with the same building inspector and they've all failed with a major structural defect. So,
am I smiling?
You just think seeing the dollar signs, or are you feeling bad for this?
No, I'm feeling bad for these people because they've had 3 building inspections. So
and obviously they've tried to buy 3 houses, right?
Yeah.
Like people aren't getting building inspections on stuff they don't want to buy. I've heard you say that a lot.
No, that's right. Well, that's my philosophy. You don't get a building inspection because you don't want to buy it. It's because you do want to buy it.
Yeah.
So there has to be something fairly major to pull out. And it's not my role, but I think like if a house has got an issue and it can be it's brought up by the building inspector. The client brings it up with the agent, who brings it up with the client, with their vendor. Normally, you can negotiate something. So
work your way through.
There's a lot of times when there's a major defect, but the deal still goes through.
Yeah.
So there's a price adjustment or something like that. So to have 3 fall over is rare. I would have thought. So I do typically too many. I do 15 a week, so 3 a day, and I would probably think. I don't know. Only 1 a week would fall over?
Out of 15.
I would have thought so. You might have a run. Sometimes I have a day where I have 3, can I say shit? 3 shitty ones.
Yeah.
And then I'll have 2 weeks where they're all like fantastic.
Yeah.
So there's no rhyme or reason.
So Shona, if I don't know if that helps or makes you feel
Ring
worse.
me, Shona.
But essentially, Shona. Graeme,
thanks, mate.
you're a good man. Thank you, guys.
Cheers.
So the next seminar is all about conveyancing. We've got a superstar here, Murray Grills from Regional Conveyancing. Welcome, Murray.
Thank you.
So he's been in the real estate sector and conveyancing for how long?
Must be around 20 odd years now, maybe longer.
Possibly one of the most experienced in Geelong, I would have thought. He'd be up there anyway. So we've got some great questions for you, Murray, and we've deliberately not filled him in advance what these are. We're trying to get him on the hob. So we've got some good ones, actually. So for this first one from Adam and Jackie. So deceased estate. Probate seems to be taking forever. If you don't know what probate is, we can fill you in on that. But probate seems to be taking forever. We're worried about a bit of a declining market. So in terms of property prices, so they're just worried basically what options do they have? What advice do they have? Can they get the property sold? What does that look like?
My suggestion would be that in a deceased estate where probate's being generated, that they should actually put together a contract, get it on the market. And within that contract, you put in clauses that suggest that the settlement will be at the end of the probate, or when the issuance of probate has come through. If you put the contract on the market and get a price on it, if it takes 3 months for the probate to go through, then the settlement would occur 14 days after the issuance of probate. And that gives them the price at the time rather than waiting 3 months for the probate to issue.
And I think that's exactly what their question was. So, Adam and Jackie, hopefully that helps. But I just think obviously in a market where I think what their question is property prices potentially dropping at, say 10% per annum, whatever
That's
that
right,
works out to
yeah.
be a month,
Yeah,
it's probably worth it taking the risk. As a buyer, if you're representing the buyer, what's your response to someone buying a property with a contract with a subject to probate clause?
Well, probate may be delayed, but it always will proceed. Eventually, there will be an issuance of probate. If there are extenuating circumstances, there are outlets within contracts to allow them to exit from the contract if need be. But at the end of the day, the process almost always goes through without too many troubles over a 3-month period.
So it certainly wouldn't just be like an absolute black mark that you just wouldn't do something like that. It wouldn't put you off altogether. It's a case by case.
It's a case by case. It's similar to plaintiff subdivisions.
Yep.
Sometimes they take 2 to 3 years, and sometimes they don't. Plaintiff subdivisions don't actually culminate because of developer issues or whatever.
Yep.
So in those situations, entering into a plaintiff subdivision contract is the same as entering into a contract that requires probate. And at the end of the day, the outcome is the same. When it does occur, the registration takes place or the probate is issued, then the settlement takes place. But you've got the contract in place with the price that you want, and not waiting for that downturn in the market.
Yep, great answer. Bought a property. Oh, this is a good one actually. So I'm glad you didn't get time to prepare for this one. So bought a property in Geelong. My conveyancer at the time didn't pick up that there was no permit on a pergola. I now want to resell the property. What's my obligations around that?
Pergolas.
Tricky one, bloody pergolas. So, yeah.
Pergolas. Look, it is difficult. Now, conveyancers don't necessarily... When a document comes in, the vendor is supposed to give the full disclosure of the property. Now, quite often, if the and we had one, it's a good example, where we had one that had been transacted 3 times, and the property had a construction on it for 30 years. And the council came in and said, this construction is going to be notified now. There's been no permits, whatever. But that was over a 30-year period. Someone obviously had seen it as being an extension on the property. It was picked up and they were issued the notification. So we can't actually work out sometimes, even if there have been documents issued or if the timeframes fit those documentation. So I would suggest that if a vendor came to me and said, we haven't done the works there, we would actually make that and disclose it quite clearly.
That's really great advice. Yeah. Not shying away from it, getting
That's right. And pergolas are tricky because what we do with our vendors is say, well, if they have been constructed, we'd like you to get a 137B, which is a special report. It's called a defects report.
We'll pop a link to what a 173 agreement is in the comments section, so if anyone's got any interest around that.
And that way you know the engineering's been done correctly.
Yep.
And disclose quite clearly that the permits weren't applied. Yep. And if it becomes a requirement, there won't be a permit in some of these cases because councils don't issue permits after the event.
Retrospective permit. Yeah, I think that's a bit of an urban legend. So I think in summary, if just get good legal advice, and obviously, we're not promoting anyone on the show, just Murray's a special friend of ours and a great client. So if anyone's got any questions around that, seek legal advice. Obviously, Murray's available, and again, we'll put links to everyone's businesses in the comments below. So last one for you, Murray. Just looking at buying, I've been told to consider buying in a super fund. Any advice for how that works?
We've done a few. The super fund doesn't allow you to use the property in many for personal use. It's more for a rental situation, yep. And there are timeframes set. Now, your accountant is probably the best person to actually follow that through with because the super funds fit under their moniker. But buying in a super fund, is a great way of actually controlling your super and directing that super for your benefit. And although there are timeframes, the real estate has been doubling over 7 years,
yep.
A 7-year period on a regular basis. So over 14 years, it doubles twice. So we've seen that right through. Even in the recent downturn in the market, they're still increasing by 5 or 6%
yep.
Annually. and over, as I say, over a 7-year period, we've seen that continually increasing. So in a super fund, that is a great outcome. If you've got an investment property with your super fund, that is probably going to get you a bigger return than what you would in some of the superannuation shares and so forth.
So if someone's going to an auction and needs to get prepared to buy the property in their super fund, what do they probably need to chat to you about before they go and purchase?
Well, we need to know that it's been bought in a super fund. The super fund would have to be mentioned in the contract.
Yep.
If there's if there are trustees or people that are running the fund, or a company that actually is set up to manage that fund, we need to know all those particulars. We need probably contact with their accountant, just so that we can follow through and make sure that those superannuation requirements are actually on the contract and built into the contract conditions for the purchaser.
So long story short, don't buy a property without talking to your conveyancer.
Talk to us.
Awesome. No worries. Thanks so much, Murray.
Thank you again.
Cheers. So it wouldn't be a property panel without talking all things rental. So Reece, Fidler, welcome to the show.
Thank you.
Just keen to get a bit of a snapshot for the viewers of just what we're seeing out there.
Yeah, look, it's been a really busy first quarter of the year for us. Demand has been really high. We've had a really smashing success leasing a lot of properties over the last few months. And I think we've got one of the lowest average days on markets as well for our rental department compared to a lot of others in this central region. So
what is it at the minute?
About 18 days. And a lot of others are at sort of that 25, 28 day mark. So and I think that really just comes down to us being hungry, and really trying to actively open properties and work with renters as well to make sure that we're getting access as often as we can without inconveniencing them too much. So yeah, it's been really busy, and it's kept us right off our feet, that's for sure.
Yeah, absolutely. Wouldn't be a seminar as such without a few questions from the audience. I've got here some I prepared earlier, mate.
Beautiful.
So
yep.
We've got one from Terry and Mandy. So considering buying a first investment, so benefits of building versus existing, so in terms of depreciation and stuff like that. It's probably a good question for an accountant and maybe Sarah as well, but your take on that, depreciation versus existing.
Look, I think it's one thing that people just aren't really that aware of in the rental market. So depreciation schedule is really important, particularly on a brand new property. There's a lot of things that you can write off through your tax process using one of those, but it is really dependent on the age of your property. So if you're buying something that's sort of 15 years or older, there's not a lot left in the property that can sort of depreciate in value.
Yep.
Because a lot of things like carpet and window coverings and stuff have a much shorter lifespan. But yeah, if you're looking at, should I buy something new in an outer suburb versus something old in a more inner suburb, the benefit of going for that newer property is definitely, there's a lot of tax write-offs. So definitely something worth exploring, and it's all really budget dependent obviously, but it's definitely a great opportunity to sort of make a little bit of a win with the tax man.
10 out of 10. Good response there. How often can I increase the rent per year? So obviously another good question probably for Sarah, but in terms of holding costs have doubled across the last 12 months, all these interest rate rises in a row. So what's the legislation around that?
Yeah, it's a couple of years ago it changed and limited it to only once every 12 months is how frequently you can increase the rent in Victoria now. So I think the key thing really is, if you're not with us, if you've got your property somewhere else, just consider bringing it to us perhaps, but really make sure your property manager is really actively reviewing the rent. There's definitely a lot of opportunity for that whilst there's a short supply of rentals in Geelong, and it's really easy for a property manager to not do the research and just say, let's put it up by $10 a week, and just leave it at that.
Yep.
But without sounding greedy, there's definitely opportunities in the right suburbs to increase it more than that where it's justified in the market, and as a result that helps balance the books a little bit when your costs are going up. So definitely worth exploring with the right person and making sure they're being proactive about researching what's happening in the market.
Yep, absolutely. Last one before I let you go off the hook. So a question from Tegan here. How do you go about picking your tradies? So what's the process there? And also, good question, do you have to disclose commissions? They put here that they've been watching Four Corners, so I thought that was interesting. But so how do you go about picking tradies, and do you have to disclose any relationships?
Yeah. It's a question that comes up every now and then in relation to whether or not we've sort of got contra deals with tradies and the like. The short answer is no. And I think it'd be very uncommon if there are people doing that. I'm not going to lie and pretend like the tradies don't drop in a little hamper or something at Christmas. And that's just, they're doing that with everyone just as a bit of a thank you. But, we're not actively doing that. It's the quote that comes into us, and the price that we deliver to you for works to be done is the cost only. There's nothing on top. So, yeah, it's pretty straightforward in that respect, I guess.
Absolutely. That's all things rentals. Thanks so much, Reece.
No worries. Thank you, guys.
Cheers. If you enjoyed today's show and you want to see more, hit the like button below, follow and subscribe, and leave some comments below for what you'd like to see in the next episode. Thanks so much for joining us. We can't wait to see you next time.